look at the clock. We are exactly 24 hours away from a potential United States government shutdown. The deadline is Friday, January 30th at midnight. But while the mainstream media tells you not to worry, look at what the smart money is doing right now. While you were sleeping, gold just shattered its historic all-time high. This is not a coincidence. When the smartest investors in the world, central banks and hedge funds, start rushing into gold, it means they smell smoke in the fiat currency system. They are hedging against a systemic failure. But here is the mystery that is confusing everyone. If the dollar is in danger and gold is skyrocketing, why is Bitcoin silent? Why is the crypto market moving sideways or bleeding out? Is Bitcoin failing as a safe haven? Or is this the quiet accumulation phase before the most violent upward explosion we have ever seen? In the next 8 minutes, I am going to expose the macro trap set for tomorrow, analyze the historical data of past shutdowns, and give you my exact 3-step battle plan to protect your wealth. To understand the risk, we must look beyond the headlines. This isn't just about politicians arguing in Washington. This is about market structure. If Congress fails to pass the appropriations bill by Friday midnight, the government enters a partial shutdown. You might think, does that really matter for crypto? The answer is yes, and here is exactly why. When the government shuts down, the Securities and Exchange Commission, the SEC, operates with a skeleton crew. This means pending approvals, ETF regulations, and oversight effectively stop. In the past, this regulatory blackout has caused institutional investors to pull liquidity out of the markets. They hate uncertainty. If there is no referee on the field, the big players take their ball and go home. This drains the order books, and when liquidity drains, volatility spikes. A sell order of just $10 million could crash the price of Bitcoin significantly more during a shutdown than during a normal trading day. That is the danger of low liquidity. A decline in volatility can be attributed to general crypto market apathy, which has occurred alongside a euphoria-inducing rally in precious metals. Gold currently trades at $5,085, after making a series of record highs over the past week, while silver is up by more than 57% since the turn of the year as traders flock to haven assets. The rotation into metals can be seen clearly on derivatives exchange Hyperliquid, with silver futures now nearing 1 billion in daily volume. That's more than all other assets except Bitcoin and Ether. Although it's worth noting that funding rates are displaying a negative skew to suggest traders are shorting into strength, as opposed to buying a potential top. But the shutdown is only half of the problem. We are facing a double black swan event. While we worry about the budget, President Trump has a second weapon on the table: the massive tariff scheduled for February 1st. Even though there are rumors of a delay, the market price is in the worst-case scenario. If these tariffs go live in 5 days, global trade slows down and inflation could roar back. This puts the Federal Reserve in a nightmare position. They cannot cut interest rates if inflation rises. And if rates stay high, risk assets like crypto and tech stocks suffer the most. This is why gold is winning right now. Gold loves inflation and fear. Bitcoin, in its current adoption phase, still behaves like a tech stock. It needs liquidity and low rates. This macroeconomic clamp is what is suppressing Bitcoin's price, keeping it trapped while gold flies. Let's look at history, because it often rhymes. In previous government shutdowns, like in 2013 and 2018, we saw a very specific pattern play out. Step 1. Initial panic selling in the 48 hours before the deadline. Step 2. A bottom is formed right as the bad news is confirmed. Step 3. A massive relief rally once the market realizes the world didn't end. This suggests that the crash we might see tomorrow could be a bear trap. Institutions might use the bad news to dump the price, trigger your stop losses, steal your coins at a discount, and then ride the recovery back up next week. Do not fall for the panic, but also do not be exposed without a shield. This brings us to the survival strategy. So how do we play this? I am executing a 3-step protocol starting right now. Strategy number 1 is dry powder. I have converted 30% of my short-term trading portfolio into stablecoins like USDC or Tether. This is not about exiting crypto. It is about optionality. In a liquidity crisis, cash is king. If Bitcoin wicked down to 80,000 or lower tomorrow, the person with USDT is the winner, because they can buy the dip. The person who is fully invested can only watch and pray. You need bullets in your gun to hunt elephants. Strategy number 2 is hedging against the dollar itself. As we established, gold is breaking out. If you cannot buy physical bullion today, I am using tokenized gold assets like PAXG or Tether Gold. These tokens track the spot price of gold ounce for ounce. This allows me to park capital in a safe haven asset without leaving the blockchain ecosystem. If the shutdown causes the dollar index, the DXY to crash, my gold position hedges my portfolio. It is the perfect bridge between the old financial world and the new one. Finally, strategy number 3, self-custody. During periods of high government stress, centralized exchanges become vulnerable points of failure. We have seen sudden maintenance modes, or withdrawal freezes exactly when you need your money the most. Today, I'm moving my long-term holdings to a cold wallet. Not your keys, not your coins. The next 24 hours will be volatile. We might see a fake-out crash or a sudden pump. By holding cash, owning digital gold, and taking custody, you are immune to the noise. I will be monitoring the deadline minute by minute. If the government shuts down at midnight, I will post an emergency update on the community tab and a new video. But to truly understand the panic, you need to know about the Black Swan event that just hit Minneapolis. This wasn't just budget math. On January 24th, the dynamic changed instantly with the fatal shooting of Alex Preddy. During an ICE protest, the viral footage turned a standard budget debate into a non-negotiable political standoff. Look at the data from the prediction markets. Before the shooting, the odds of a shutdown were sitting calmly at 10%. The day after, they rocketed to over 75%. Why? Because Democrats are now demanding strict reforms, like mandatory body cameras and warrants for agents, before they approve a single dollar. And here is the logistical nightmare that almost nobody is talking about. Even if the Senate manages to make a deal tonight, the House of Representatives is currently on recess. They are not even in the building to vote. This bureaucratic deadlock means a partial shutdown starting Saturday. Morning is no longer just a possibility. Statistically, it is now the most likely outcome. Make sure you are subscribed with notifications on. Do not let the volatility shake you out. Stay sharp.